Here in this video, we will be going over all of your Tesla stock breaking news that you need to know, as well as what in the world is going on in chips today. Chips are getting absolutely destroyed, and it looks like fear is finally starting to set into that sector. So we have a lot to get into here in this video. Tesla's stock is down over 1% today, sitting in the 140s. What's the situation like, and where is Tesla stock going next? All of this and much more coming at you guys right now. So first things first, the Nasdaq is getting destroyed today. The Nasdaq is currently down about 1.8% at the time of recording this video. And for the first time in a long time, that pain is really not concentrated, because most stocks are falling today. That's not the right word that I would use, but you're getting the most weakness in your chip stocks today. Look at ARM, down 9.5%. SMCI, down almost 19%. NVIDIA, down over 5%. AMD, down 4.5%. What's going on in the most important sector in our markets? Now, there has been bad news recently. You had ASML really give you bad guidance for your high-end semiconductors. That's not great. TSMC had good earnings for the most part, but they said the consumer's still weak in areas like smartphones and personal computers. So you've had a little bit of bad news for the chip sector recently, but you did have this new analyst that came out today that downgrades ARM stock ahead of their earnings. A downgrade in the chip sector is pretty dang rare. You can see PNB Paribas analyst David O'Connor on Friday reduced his rating on ARM stock to neutral from outperform. He says, so that's like almost like a double downgrade, right? If you were at outperform, you go to neutral, you really skip past the buy, right? You just went straight to neutral, while keeping his price target at $100. O'Connor's downgrade reflects his cautious stance on the stock ahead of the company's May 8th earnings report. He notes that Wall Street's consensus forecast for 25% revenue growth in the March 2025 fiscal quarter, including 40% royalty growth, provide, quote, little room for an upside surprise. The analyst says the company needs to do more than provide inline guidance for the full year when the stock is trading at a premium. ARM trades at 65 times earnings estimates for fiscal 2025 and 25 times expected revenue of $4 billion. The company is likely to provide full year fiscal 2025 guidance on the Cummings earnings call. Now, I've warned about ARM a lot here on the channel. It was literally a ticking time bomb. You have one investor that owns over 90% of the stock in ARM, and I'm sure we'll get more clarity to whether or not they have sold, and that is SoftBank. But this downgrade is definitely having an undesired effect on the rest of the chip sector. Mix that in with already just not impressive earnings from ASML and TSMC, and boom, you get a really bad day for the chips. You can also see big tech is taking a big hit as well. Microsoft down 1.5% today. Apple it really has not been doing well for a while, but they are down about 1.65%. Amazon down almost 3%, and Google down about 2%. You also have Netflix that is currently down about 9% as well, and Netflix had a fantastic report. Like, things were great over at Netflix in the last quarter, but yet the stock's down 9%. If any of your companies, AI related, big tech, provide anything short of fantastic, or, you know, knock your socks off on earnings, they could fall huge. I mean, a 9% drop on Netflix beating subscriber numbers or estimates by almost 50%. That's insane. A $20 million shortfall to guidance next quarter caused a 9% drop. You got to be concerned about the rest of the markets heading into this earnings season. I think you are getting that fear here today in broad markets, and that's why you are seeing a sell-off more than any one specific piece of news. The chip sector definitely has not had the best news as of recently, and when valuations are as high as they are in the chip sector, that's problematic. Now, if you are a Tesla stock investor, if you're basically all in Tesla like I am, yes, I do trades and I do have other stocks as well, but recently I've been plowing as much money as possible into Tesla. It's important to point out Tesla's stock is actually doing pretty dang well today. relative to your other big tech names and most certainly your AI stocks. Tesla is only down about 1%. And I laid this out 2 videos ago as easily as I could, as open, transparent as I could. Keep it so simple, it's stupid. Hopefully you guys remember that. If a stock has super high expectations, the stock's trading near all-time highs or at all-time highs, it's probably going to fall after earnings because there's not much you can do that is going to impress investors unless you have like a Nvidia type quarter and it's just crazy good across the board. If a stock is a high quality stock, it's profitable, has a long-term growth trajectory in front of it like a Tesla, but it's trading at 30% discounts for 2024, the stock's probably going to do well on earnings. And I think this move in the markets is really based around earnings. Stocks were priced for perfection. The earnings we're getting so far, they're not perfect. They're not close to perfect. And even earnings that are near perfect, like Netflix, the stock is still selling off 9%. I think you're set up in a favorable way for Tesla, but if the markets continue to fall, it's going to drag down Tesla stock with it. And I will tell you, if you take a look at the technicals for the Nasdaq, oh boy, they are bloody. They are bad, okay? Just outright bad. If you do not get a bounce here towards the end of the day in a very, significant way, this is bad. You recently fell under your 50-day moving average and your 20-day moving average, clearly. You've been going straight down. You're now breaking under your 100-day moving average today. In fact, on a technical basis, it's almost like you got rejected here. And this was resistance today because obviously last night you had that Israel strike on Iran and that caused futures to fall and markets kind of opened lower because of that. Some of the fear subsided as it only was a small operation apparently, and it doesn't look like Iran's going to retaliate back. We'll see. Anything's possible there and something to, keep your eyes open for. But by the time you tried to rally today, got back to somewhat break even, look, it was resistance, the 100-day moving average. So you are falling yet again. That sets you up to test your 200-day moving average. And unfortunately, you don't have a lot of support from where we are now at 415 down to 395. On the triple Qs, the Nasdaq 100, and that would be your 200-day moving average. There's just not a lot of support at all. There's just not. Maybe you could say a baby level here at 410, and then 400's a nice, round number. Maybe there's some support there. But other than those two small levels, there's just not a lot of support. You are seeing 10-year treasury yields that are falling almost 4 basis points today, so some money is going into bond markets, but this is not that huge flight to safety yet. If you get a flight to safety like you had last night when 10-year treasury yields were down at one point, the futures on them were down over 10 basis points, that's more of a rush to safety. Today is kind of a typical tech chip sell-off. If you do get a rush to safety, that'll tell you something. Potentially any news we get over this weekend or with the actual earnings next week could definitely cause that. But 10-year treasury yields are still very high. So you're still getting that negative pressure on markets. And in fact, this is the most aggressive sell-off that you have seen, in a long time. Like a very, very long time. Nothing looks even close to as aggressive as this, just kind of straight down. This is what, 1, 2, 3, slightly red, call it 4, 5, 6, basically 6 days in a row you've been red on the Nasdaq, and they've been like 1% days or pretty close to most days. That's a lot of downside momentum that's starting to build. And just like the upside you guys seen in 2024, momentum is strong in either direction. To the upside, momentum strong. To the downside, momentum is strong. And this downside momentum probably gets worse from here as we head into next week and you get your big tech names. Now, you're going to have GM, UPS, GE, Pepsi, Spotify, RTX, JetBlue, Halliburton, Tuesday pre-market, Tuesday and after hours, Tesla, Visa, Enphase, Texas Instruments, Chubb, Mattel, Weatherford, Seagate, couple other names. Wednesday pre-market, Boeing, AT&T, Humana, General Dynamics, Boston Scientific, Biogen. Wednesday after hours, you are going to have Meta, IBM, Ford, Chipotle, ServiceNow, Lam Research. Lam Research can be another big important AI stock as well, so keep that one on your radar. Thursday pre-market, you are going to have Royal Caribbean, OSI Systems, American Airlines, Newmont, Altria, Caterpillar, Southwest, Mobileye, AstraZeneca. Thursday and after hours, that is your big test for our markets. These are the stocks that are really going to have a big weighting on the markets. You have Microsoft, Alphabet, Intel, Snapchat, Roku, Western Digital, Dexcom, T-Mobile, Gilead, and Agnico Eagle. Obviously, Microsoft and Alphabet, the big ones. I'm surprised to not see Amazon on here. Pretty surprised, and pretty surprised actually to see Microsoft and Alphabet on Thursdays. They're typically on a Tuesday. So kind of strange, just the way these companies are reporting earnings. But yeah, Thursday is a big test for markets coming up next week. And I think given what we've seen so far with earnings and how these stocks have reacted, ASML fell, TSMC fell, Netflix fell, your big banks fell. Yeah, the markets were not priced for okay earnings or good earnings. They were priced for perfect earnings. Now, again, in the case of Tesla, I think Tesla is priced for really bad. If things are just bad or okay or good, the stock is going to rally quite a bit coming next week. And again, Tesla's stock is on a relative basis outperforming even the Nasdaq today, which is down almost 2%. Tesla down less than 1%. That is a relative outperformance because Tesla is down less than the Nasdaq. And I think that is, again, because Tesla's already fallen so much and Tesla is not priced for perfection like the broader markets are. With that said, that's kind of the backstory of what's really driving the markets today. Lots of fear, some panic in your AI/semiconductor areas, and stocks that have gotten beaten down like a Tesla, they're actually doing a little bit better today than what you would expect. With that said, let's go ahead and get into all of your Tesla stock breaking news today. According to comments from the 10th largest Tesla shareholder in the world on Elon Musk's compensation package vote, they say, quote, "We believe the 2018 plan demonstrated strong alignment with the interest of long-term investors, and it was followed by an impressive validating period of value creation. You now have the first Cybertruck in Dubai." And it looks like Kevin Durant has got himself a Cybertruck. His is with the matte black wrap. And it looks like white interior Model 3s are starting to be delivered to customers in the US. Gary Black writes on X, Tesla's earnings next week likely to signal more estimate cuts, reducing full year 2024 volume guidance and no big changes in timing of the $25,000 compact relative to Robotaxi. Now, I'll sit here and say that's already priced into Tesla stock. Volumes declining, that's priced into Tesla stock. EPS estimates falling, that's been happening. That's not going to be a huge surprise either. Now, what I will say, and I'll talk about this more in the next video, I actually think this tweet from Gary is going to be proven very wrong. And I think Tesla's stock is going to go up big time coming next week. Tesla's global inventory numbers today for the Model Y continue to fall a little bit. The Model 3 is rising today a little bit by only about 45 units. The Model X is falling a little bit, and the Model S still sitting down here at about 1,300 models in global inventory. Tesla continues to run about 4,000 different ads with Google. Google search trend activity is starting to fall for the Tesla lineup, at least a little bit in recent days. The Cybertruck going from 56 at the high down to 53. The Model Y going from 34 to 27. The Model 3 going from 24 to 23. The Model S going from 12 to 11. And the Model X staying down here at about 9. But this is pretty typical in this time of the year. Trend data for FSD for full self-driving is down to 40, and it looks like you're starting to kind of bottom out here, and that would be a very strong level to bottom out at. Previously, you were anywhere from 10 to 20 for like years as far as interest on Google for FSD or full self-driving. If you can bottom out in the 30s or the 40s, that would suggest a higher take rate is likely happening. Option activity in Tesla stock today is quite positive. You do have a positive order value of 63% from hedge funds and institutional investors. That is a great sign heading into a weekend and next week's Tesla earnings. Now, you do have 474 orders totaling $261.57 million. So it's not a huge dollar amount just yet. In the next video, it's probably going to be higher. I would imagine around $1 billion for today, but 63% positive. If we hold that up, that's going to be one of the most positive days for Tesla options that we have seen in a long time. And that kind of coincides with what Tesla stock is doing today, and that is outperforming the markets. Shorts, I do believe, are biting off more than they can chew, and you are starting to see more shares being returned, potentially covered or just returned before Tesla's earnings. You do have 1.08 million shares that are returned today, only borrowed shares of about 150,000. Now, that suggests to me that people want to take some risk off the table heading into Tesla's earnings. And that's a pretty good sign from big money that the stock is probably going higher after earnings. Now, we'll talk about that a little bit more in the next video, but that's a pretty dang good sign. You do have short interest of free flow at 3.88%, $16.13 billion currently in short positions, with about 107.58 million shares that are currently sold short. You do have shares out on loan that is recently dropped to 27.22 million. At the high, you were at 30.24 million, so or 33.24 million. So you've seen about 6 million shares be returned before they were ever sold short. And, you know, that's kind of a test to where Tesla is right now. On a risk to reward basis, it doesn't make a lot of sense to be short Tesla. You do have the percent of stocks above their 50-day moving average actually going higher today, now at 28.06%. 1.32% of stocks out there on our markets broke above their 50-day moving average today. That's actually pretty strong relative to the day like today that we're seeing in broader markets. But then again, the weakness that you're really seeing is concentrated mostly into big tech as well as your AI stocks. So if you do see a continued market decline from here, it is possible that that is driven by AI and big tech falling, whereas the rest of the markets could see some capital get allocated to them, as really 2024 up until today is, well, small cap, interest rate sensitive, mid cap stocks, they have not done well. You can see the percent of stocks above their 50-day moving average has been declining in 2024 from 86% down to where you are now at 28%. It hasn't been a great year for most of the markets, just big tech and AI. So you're starting to see the leadership changing a little bit today. And if that continues, should be good news for Tesla. You do have the fear and greed index falling a little bit more today, down to 32, which is in fearful territory. Not quite in extreme fear just yet. You have to fall under 25, but you are getting pretty close. Currently, for September 18th, 2024, you're still pricing in the first rate cut with 45.7% odds. For November, you're expecting a continued pause, November 7th, the day after the election. And December 18th, you are still expecting a pause. It's pretty close between pricing in 1 and 2 rate cuts in 2024. If we do get 2 rate cuts, the second one's going to be probably December 18th. Now, you're still, again, technically only pricing in 1 cut at 35.4%. The odds of 2 cuts sits here at 32.6%. So you're pretty close. If you start to get, you know, better inflation data, maybe weaker economic data, you're definitely going to price in that 2 rate cuts more definitively. And it wouldn't surprise me to see 3 or 4 rate cuts come back onto the table if we did start to see the economy getting worse, or if inflation did start to fall more than expected over the next 1 to 2 inflation reports. So I would be pretty careful assuming that the path ahead for Fed policy is determined, because the next month or two of inflation, economic data, that's really going to decide what the Fed does. As I showed in the last video, investors are trying to hold on to the bull thesis. You do have 38.3% of investors that are bullish, 27.8% of investors that are neutral, and 34.0% of investors that are bearish. The bears are up a lot, the bulls are down a little bit, and neutral investors, surprisingly, are also down. That's because a lot of the neutral investors flipped to the bearish side within the last 2 weeks. And if for whatever reason you can get back above that 100-day moving average, that's going to be great for the bulls. But if not, what's most likely going to happen here is you find a little bit of resistance around this 100-day moving average. Odds are you probably bounce around in this area until you get into next week when you get your big tech names that report earnings. And depending on how those go, that's where you get even steeper downside. The stock at the time of recording this video is only down about 0.5%. So that's pretty good. It looks like you bounced again around 147.80, which is the case over the past 2 days now. In fact, Tesla hit a new low for 2024 today and then bounced quite a bit. Now, at one point, Tesla stock was actually above this lower end Bollinger Band at about $150 per share and some change, and now you're back under that. Now, I have the Bollinger Bands pulled up here on the charts. Now, it's a little messy, but work with me here. This is your 20-day moving average. Stocks tend to revert back to their 20-day moving average over time, right? Over the course of a couple of week period of time, right? You tend to bounce back to that eventually. And you guys can pull this up for yourselves. But when you get to this lower end band, this yellow line here, you don't tend to be under that for too long. That's basically showing you standard deviations and volatility around your 20-day moving average. So this drop in Tesla is historically fast. That's basically what the Bollinger Bands are saying. And you're actually under that right now. It's pretty rare to get under your lowest end Bollinger Band and to stay there. So judging off of the Bollinger Bands, you should be reverting back to about $168 or so. That probably happens after Tesla's earnings. And that's why I did make a trade on Tesla earnings. If you guys want to see that, check out that link down below in the description of this video. If you also look at the RSI here for Tesla sitting at 31.32 and the MACD line at -7, the signal line at -5, sentiment is pretty dang washed out for Tesla. Again, I've said it before and I will say it again before Tesla's earnings, but it's going to be hard to surprise investors to the downside. Like, give us what? Bad news we don't already know about? Are you serious? Like, what do we not know about that is not factored into Tesla stock or priced in? I'll tell you right now, there's not a lot of good news priced into Tesla stock. And I think Elon Musk being in war mode, he's going to focus a lot more on profitability. Like, what is war mode? What are you really trying to focus on in war mode? Cut costs, become more profitable. That is war mode for a CEO. Wall Street hasn't picked up on that. I do think EPS estimates go higher after Tesla's earnings, aka you're probably not going to have a chance to buy Tesla in the 140s again for a while. Whether or not the economy gets worse, we go into a recession, or the Fed raises rates again, I think those are the reasons why Tesla could break under 140. But I don't think Tesla's business specifically, if all else is equal, is going to give you a better buying opportunity than what you are seeing now. That's just my personal opinion. Obviously, could be wrong. Let me know what you think down below in the comment section. So with all of this said, hit the like button as well as subscribe to the channel. We don't have a lot of Tesla specific news to go over. I just give you what we have, and that's all we have. So let me know what you think down below in the comment section. Oh, I almost forgot. I actually seen another Cybertruck meme. This is from my phone, and I screenshotted it and sent it into the trading community here. It says, when you get your Cybertruck off Temu. There's a lot of Cybertruck memes that I'm seeing right now on Facebook specifically, and it really just goes to show the look of the Cybertruck. Well, it's starting to spread the message about the Cybertruck at a very fast pace. So that's what I want to show you. Hit the like button, subscribe to the channel. Let me know what you think about this information down below in the comment section. Again, if you guys want to come join the trading community, check out that link down below in the description of this video. You guys have a great rest of your day, and I will see you in the next one.